Welcome to Breaking Banks. Welcome back to Breaking Banks. Today we're going to talk about open finance, embedded banking. They're a theme that you hear fairly regularly on Breaking Banks, but in this perspective, we wanted to bring in two organizations that are really at the leading edge of this from a platformification and infrastructure perspective globally. And that is Ginger Baker. She's a returning guest, head of financial access at Plaid. Welcome back, Ginger.
Thanks so much for having us again, Brett. Great to be here.
And Q2's been on the show frequently as well. Adam Blue is the CTO of Q2. Adam, welcome to Breaking Banks.
Thanks, Brett. I appreciate the invite. I'm looking forward to it.
No problem. So, Ginger, you're sort of got all the fintech experience. You did some. You spent some time at Ripple. You were the founder of the mobile financial services product group at Facebook. You looked at financial services and payments on Messenger and WhatsApp. So, going to be very interesting to talk. And you're at Square and Visa previously as well. So. I want to definitely get into the whole wallet conversation, embedded stuff today. And Adam, you're a big believer that tech can sort of change the world. You've been at Q2 for a while, but you previously were at Cipher Trust, so you've got some cyber security experience, QUp Systems, Savannah. Welcome to the show, both of you. In terms of open finance, why are we hearing more about open finance, more recently? Maybe, Ginger, if you want to jump in first on this one.
Sure, Brett, happy to. Well, open finance certainly became, I was going to say a household name, but I think if you were to ask my parents or my husband, they might not be talking about open finance all the time, but it's certainly an industry household name during the explosion of digital financial services during COVID. And while there was a lot of discussion around open banking, the need to expand services and expand access into more diversified types of accounts on behalf of people became very obvious over the course of the last 18 to 24 months. Because as we were forced to move into a digital-only environment, we needed better solutions to be able to manage our financial lives without physically going to bank branches. So the reason that open finance has become such a hot topic is because we were pushed into this pandemic, and the growth of digital financial services probably grew. We probably gained 5 years of evolution in this realm in a 1-year time frame. Just to put a little context around that, Brett, between 2022 and 2021, the percentage of U.S. consumers who are using fintech grew from 58% to 88%. So that's more than a 50% year-over-year increase. And that kind of adoption for like refrigerator use took 20 years, and computers 20 years.
It's more users on fintech than social media now.
Oh, okay. Interesting. There used to be a great stat about toothbrush use. So I don't have it jotted down in front of me, but I think fintech may have overtaken toothbrushes as well. So I'll have to look that up after the show.
That's pretty scary.
So I think that's
oral hygiene is important, people.
It is important. It is important. But then, and I'm happy to get into this, but maybe we do it a bit later in the conversation. But I think just in addition to the environmental factors that moved us into this place, there are also a number of industry-related trends as well as technical trends that I think have also brought this to fruition. And we can talk about them now, or I can hold them for later.
Adam, this relentless march of technology changing banking and so forth, we've seen over the last decade growing acceptance, but grudgingly in many respects. And the pandemic certainly sped things up. But wasn't it a case that what we're seeing today was largely inevitable? I mean, Ginger saying we saw 5 years of progress in the space of 12 months. But from your perspective as a technology guy in the space, weren't we always on this trajectory anyway?
Yeah, I think that's a great observation, Brett. I would tell you, we've been exchanging data with partners on behalf of end user applications for things like Direct Connect and Express Web Connect for Quicken and QuickBooks for, I mean, going on 13, 14 years now. But they were very singular kind of solutions, right? And they weren't particularly open. They weren't characterized by an ecosystem, and they were delivered kind of point to point via a business relationship. So the technology, it's matured and gotten much more effective. Open API and a variety of other movements have led to a lot of progress in being able to do those things. But the underlying technology has been around for a long time. The kind of events and the kind of shift that COVID brought around, there's just so much inertia in account holder and end user behavior. So when people say, I just can't go to the branch, but I still need to perform these tasks, the friction that they're willing to tolerate to try and learn a new way to do a task the first time, I think really drops. And then they find out, well, this is actually a pretty convenient way to live and work, right? Like it boggles my mind that every single check, and yes, there are still checks in the United States, there's lots of them, doesn't get deposited via mobile remote deposit capture. But there are reasons that people are kind of, and I don't think they're resistant like, I think mobile remote deposit capture is bad. They're just resistant because the cognitive workload of trying a new thing and it maybe not working out and it being tedious. But once they overcome that and it becomes part of a new habit, it's very difficult to take people away. We always joke at Q2, the most hated piece of software is the last piece of software that you gave someone, and the one they love the most is the one immediately before the one that you just replaced. And we find that cycle constantly. People just don't like change in the surface of applications and ecosystems that they need to get through their day. It's expensive for them. Except
if it's Excel. Excel is annoyingly persistent, but we haven't got anything better.
It's the Rasputin of software. I personally have tried to kill it many times.
So, when we talk about the platform side of things, both of you are in businesses that, we could characterize as sort of core extensions or middleware plays, more definitely the platformification element of open financing. It wasn't that long ago, like 10, 15 years ago, where we heard a lot of talk about core system replacement. And now that's died down a lot. Obviously, JP Morgan Chase has just chosen a real-time core thought machine for some work that they're doing. But those sort of announcements are fairly rare these days, at least in 2021. But there's a lot more work being done on bulking out the product delivery capability with additional data and additional technology that can sort of plug into the core. But so in terms of that approach, where do you guys see the relationship between open finance and core systems for traditional banks moving forward, particularly in the US, where is your biggest market for both of you?
Yeah, Adam, why don't you start, just given your proximity to that, and then I'll add on when you finish.
Yeah, absolutely. Thanks, Ginger. So at least in the Q2 platform, part of our responsibility to our partners like Plaid is to abstract away all of the differences between the 50 different core providers and flavors of core provider that we bring to the digital channel. So when an end user logs into the Q2 platform via mobile or desktop or tablet or even Apple Watch, they expect to see consistent data all the time, and it's got to match. And the data that we provide into the open finance ecosystem via aggregation interfaces and structured API also has to match. So a lot of the work we do is actually to flatten out and abstract away the differences between these various core integrations. I would tell you, I feel like digital providers like Q2 and integration providers and ecosystem providers like Plaid have been able to advance technology rapidly enough that we probably are at least partly responsible for the reason cores don't get replaced or modernized. Because if you're making this big investment in a financial institution, in the end user facing applications and in the open finance parts of your business, you really don't need to spend a lot of time, quote unquote, modernizing the core. And frankly, given that the core represents back office processing and a set of value around operational characteristics and very little to do with end user experience, the use of the word core to describe it is a real marketing win by the companies that deliver that software, because the total number of user interactions we get in the digital channel or through a channel like Plaid out from a fintech, it outnumbers the number of human beings that interact with the core directly by, I don't know, 100 or 1,000. And so I think that the rise of digital technology and the openness of finance inviting fintechs to take advantage of predominantly digital platforms for the most part, at least in our part of the market, that enable that, leads to less pressure on, hey, let's modernize the core, because digital presents this entirely alternate platform for doing the things you need to do and learning about your customers and delivering value.
And I think the use of these types of platform solutions, just in the case of Plaid, are going to be used by just a whole host of different types of providers as we go forward. So, similar to what Adam was saying, just kind of extrapolating out the complexity and trying to offer a very simple solution-based product to our customers is something that we're hyper-focused on. And traditionally, those customers have been fintechs and smaller startup fintechs, but increasingly those customers are large enterprise tech companies, major financial institutions, and just a whole host of other kinds of entities who are all starting to lean into the use of digital platforms like Plaid, like Q2, et cetera, to build the kinds of digital products that their customers are asking for. And then, from Plaid's standpoint, ensuring that any kind of institution, regardless of their type, meaning are they a bank, are they a credit union, are they a fintech, neobank, are they a workforce data provider, whoever they happen to be that holds data on behalf of a user, should be able to access Plaid's, the services and applications that Plaid helps to power. And so using providers like Q2 and other types of platforms to kind of expand that reach so that we can stay hyper-focused on ensuring that universal access is basically guaranteed to all people. So they don't have to bank with the largest commercial bank or consumer bank. They can bank at a small community bank or credit union and still have the same high quality, reliable access to the fintech applications that they want to use is critically important.
In respect to the products that people are requesting that go outside of the core, what are some of the more notable examples of that, do you think, Ginger?
Meaning
you said Plaid is being built to build the products that customers are demanding. So, what are those differentiated experiences or products day to day that you could build on Plaid that you would have difficulty doing without Plaid?
Sure. So any kind of embedded experience where the payment or financial services is capability is almost unrecognizable. I actually gave this example just this week because my kids ordered a movie off of Amazon this weekend. And I don't think about who provided that financial service, right? There was a purchase somewhere in there, but I don't think about whether, in fact, I'm not even sure whether or not it was my, credit card or debit card or something else that actually, or maybe even a stored value like gift card I had loaded into Amazon that actually facilitated my family sitting down to watch a movie on Saturday. All I knew was that we ordered a movie on Amazon. And so those kinds of experiences where, the authorization, authentication, linkage of accounts and ability to make payments is done completely in the background of the experience you want to complete is just increasing, right? So that could be purchasing a car or ordering a movie or getting through an app experience or, buying a product that you don't want to pay for in full today, but you want to pay for in installments month over month. All of that stuff can be facilitated because Plaid helps those experiences connect payment tools and applications in the back.
So in respect to sort of this building ecosystem, the ecosystem that's emerging for 2025, I do this as in my talking head stuff as a Venn diagram overlapping three players, right? Which is the surviving incumbent banks, and I say that with purpose, the tech giants, because they own a lot of the infrastructure that delivers financial services, such as smartphones, emerging smart glasses, smart speakers, and so forth, and the fintechs. Right. And so, I know Andreessen Horowitz says, Mark Andreessen says everyone's going to be a fintech, in the future, and everyone's going to be a health tech company and so forth. But the reality is they're the sort of three main groups of people coming into this open finance ecosystem. So when I know you guys have recently struck up a partnership, Movin works with both Q2 and Plaid, in respect to deploying mobile banking stuff. But how do you choose fintech partners to come into that ecosystem, giving changing customer expectations? Maybe Adam, you want to start, and I can go back to Ginger.
Yeah, for sure. On the Q2 side, and honestly, I think Plaid is fairly similar in this respect, which I take as an endorsement of this approach. We try and be very supportive and neutral. And so we have an offering called Marketplace. And as you mentioned, Movin is part of the Marketplace offering at Q2 around kind of a bank in the box approach. And we have lots of different capabilities that are starting to become part of Marketplace. So we've done some stuff around partnership with NYDIG to deliver their ability to purchase crypto assets and then hold them, but within the authentication perimeter of digital banking. We have worked with Autobooks, who has a great small business kind of accounting and automation solution. We've worked with a company called Veeam that does some really interesting payment stuff, in particular cross-border. And so as long as a partner can establish that they can effectively utilize the Marketplace tool set and that they will comply with, kind of the guidelines around security, privacy, so on and so forth, everyone is welcome to participate in the ecosystem. And so our focus really is on making it straightforward and I think easy to deliver value to our FI customers, account holders, by making it as kind of open as possible for any of those fintechs that want to come and create value. And then the notion of the Marketplace is the demand for their services and the value they create will kind of sort out whether it makes sense in the long term.
Yeah. So I do endorse that approach. I don't know, that does sound quite familiar. I think that's just like maybe 2 or 3 other things to add. And we think about, and both the provisioning of information into the applications that Plaid supports, as well as the applications themselves who utilize Plaid services. It's all about expanding what those nodes are, basically strengthening them, and then making sure that the value proposition can be derived, right, by whatever those entities want to be doing. So there's a few other areas that we've been spending a bit of time on, which is one, Plaid has always had a really robust developer experience, platform and program, just to make sure that developers can get the tools that they need to get started really quickly. So let's get their businesses up and running and then help them grow. We're beginning to do it also on developing self-serve tools and programs that help institutions who want to allow their customers to permission data other places to also get started in a similar way. So this is the work of the financial access team at Plaid in 2022 at building out self-serve tools, especially around Plaid Exchange and some of the other capabilities, so that any type of institution that wants to get started quickly in enabling their account holders to permission data to other places can do that with the right tooling. So that's another piece of this as well, which is not just about enabling wanting everyone to join into the network, but enabling them to do it quickly at low cost and in a way that maps to the resources they have.
The US market is a little bit unique in this respect to other markets. You're both obviously focusing on the US market. But we have an unusual situation in the United States where about 70% of banks in the US basically rent a core from one of the core providers. Do you guys find that, speaking to those banks in that 70%, that most are sort of unaware that they can go outside of that technology relationship to partner with fintechs, or is there a growing awareness that there are other options available?
On the Q2 side, we talk to customers constantly about how they're going to partner with fintechs. marketplace is an important idea for us, and it was really driven by customers saying, we want to partner with fintech companies. We know they're out there. We think partnering is a way we can create value for our account holders. And I think they're pretty confident in a lot of ways in their value proposition to the customer in the community, because they have strong customer relationships. There's obviously a focus on digital for them, but I think they're very keenly aware that they can go outside of those core relationships. Now, to be fair, I may have some selection bias because the folks I'm talking to are predominantly prospects and customers of Q2. And it may be the case that those financial institutions are the ones maybe that grasp that as an effective strategy for them. But I can't remember the last time I talked to an FI in the last 4 or 5 years, and they weren't contemplating a pretty broad array of fintech partnerships that were really not what I would say core driven. If that's fair.
Yeah.
Yeah.
Before I want to come back to that, Ginger, but
Sure.
If you were one of these community banks or credit unions in the United States right now, and you were looking at extensibility of your platform over the next 4 or 5 years, as the embedded banking, open finance stuff, the platform-based stuff really takes off, where are the sort of things that those banks should be looking, to rapidly get into the open finance game and really show their customers some differentiated abilities?
One, I would just say get started as soon as possible. I think that, and this was what I was going to add on to Adam's comments, is that many of the institutions that we've talked to that are dependent on some of these core, so the 70% that you mentioned, Brett, they are evaluating lots of different types of partnerships and other kinds of capabilities that they can use that are provided by fintechs. One observation is I think there might be a little bit of analysis paralysis in a few of those conversations about where to get started first. What's the right first step to take? What's the right combination of things to do? And my nervousness on behalf of some of these institutions is just that they're not moving quickly enough. And just given the explosion that we saw over the last 2 years, I want them to move faster because I want them not to lose customers to institutions who are being more open and more aggressive about enabling an interconnectivity with their accounts. And so the first thing I would do is just to get started, right? And not to be like promotional here, but like call Plaid, like we'll get you set up with Plaid Exchange so you can make sure that your customers have access to the other types of services they want to use. We've seen a very direct impact on both revenue, retention, and transaction numbers for accounts that are quote unquote open and have access to the variety of different services that people want to use. And so that would be my overarching observation is there's just a little bit of stalling with some institutions. And I would say the faster they can move forward, the better.
Yeah, I think, if you are going to start with, how to help someone just in pure data terms, managing their finances, the first thing you got to do is make sure that they have an overview of all their finances, including their different bank accounts and their different credit cards, so that they know the full picture of their finances. That seems a fairly easy starting point. But I want to talk, just before we go to break, I just want to talk a little bit about financial inclusion. We have a growing awareness globally of the problems associated with inequality right now. The United States, particularly the inequality has grown during the pandemic. The billionaires in the US accumulated $1.6 trillion of new wealth during the pandemic. We have about 250 million people that slipped back into extreme poverty during the pandemic. So the gap between the rich and the poor is sort of reached a crisis level. And as part of that, access to financial services continues to be critical for financial mobility. So, we have about 20% of households in the United States that remain underbanked. And part of that is just simple identity issues. But where do you see open finance bringing solutions in respect to both the issue of financial inclusion more broadly, access to credit for the underbanked, and, generally some improvements in terms of financial equality?
Yeah, I'm happy to start here. I mean, just to build on your point, Brett, I mean, I think the CFPB says that 1 in 10 adults don't have any credit file with any of the 3 major credit bureaus. So I think there's obviously a lot of room for improvement in the way that we're providing services to people that may have traditionally been less well served. This is, where a lot of like passion and motivation comes at Plaid, and the way that we diversify the types of institutions that we enable to provide information to lenders and tools that make credit decisioning. So, for example, expanding beyond just simple bank data or checking and savings account and reaching things like payroll information, income statements, utility bills, call reports. Like if you think about some of the inspiration we've seen in markets like East Africa and India, where people are using things like call logs and prepaid phone time and all of these other sources of information about people's responsible behavior that may not look traditional and standard in the way that the U.S. infrastructure has deemed it to be. This is a place where we can really start to open up opportunities so that people can get instant access to credit based on the contextualized nuances of who they are as a person, even if it doesn't fit into the very standard credit file requirements that we've seen over the last couple of decades. So I'm tremendously excited about this. So this is going to be an exciting thing. I think we'll start to see a lot of this stuff open up even in 2022 in the first half of this next year.
Fantastic. All right, Ginger, Adam, hold on. We're going to come back after the break, and I've got some more questions. I'll talk briefly about Rwanda, Ginger, maybe if you can.
Oh, sure. Fantastic.
Let's talk about, because, we're on financial inclusion, and then let's get into, what this partnership between Plaid and Q2 is all about for 2022 and beyond. All right, guys, we're just going to take a quick break. You're listening to Breaking Banks. We'll be right back after these words from our sponsors. Welcome back to Breaking Banks. I am your host, Brett King. We are coming up on our 9th anniversary in May, so stay tuned. I hope we have something special for you. We're working on some stuff there, but we have joining us this week Ginger Baker, the head of financial access at Plaid, and Adam Blue, the chief technology officer at Q2. So, Ginger, we were talking about financial inclusion, before the break, and we've seen dramatic improvements in financial inclusion in places like Kenya. You worked in Rwanda, Ghana, Nigeria with MTN Money and M-Pesa and things like that, doing some incredible things there. But the flexibility of those mobile money platforms, as you said before the break, to look at things like airtime on the phones and so forth. It occurs to me that if we sort of play out what's happening in China with Alipay and Tencent WeChat Pay, in India with Paytm, in Africa with the mobile money plays there, we are very soon going to get to the point where the majority of customers globally use a mobile wallet as their primary bank account versus a bank account issued from a bank. But having been a part of Visa's business going into Rwanda, with the mobile wallet growth that we've seen in Africa versus plastic, are we seeing two competing ecosystems emerge here?
Oh, Brett, I feel like we could do like a 5-hour talk on this, honestly. No, I don't believe that so let me give a little context. Okay, so the reason that those wallets were able to take off in the way that they did, and this is, more than 10 years ago now when it really started to unfold, was there was a lot of different ways in which people were accessing services traditionally that were just too difficult to spread to the masses. And so the opportunity really became, how do we use, if you can't justify building a bank branch in a rural community, you can't even justify the cost of issuing a chip card, right? Based on the amount of business that's going to happen through those accounts. What's the cheapest, lowest cost way that you can service people with financial services? And that became using their cell phones. And this was even before smartphones, right? So just how do you use a USSD menu and a, network of retail agents in rural communities to allow people to load, cash to digital form and then use that to send money, pay bills, buy airtime. And, because the services were more limited and they were based on a prepaid wallet, The regulation was looser around that, or it wasn't as stringent. And so I think over time, as you've started to see the emergence of how much opportunity can be born from those types of solutions, governments around the world have taken a look at how do we make sure that these maybe lower friction accounts around mobile wallets are not being treated unfairly in the context of what banks and other providers are offering. So I'll use the example of the Philippines, where I spent a lot of time when I was at Facebook. They were really building a domestic payment service that could incorporate both wallets that were opened up by the subsidiaries of the major telcos, in addition to the banks. And how do you create a service that interoperates those different types of accounts and allows people to use the type of account that gives them the solution and service they need in the moment that they need it? Some people want to use full bank services for a whole host of reasons. Some people are very happy to just load in a few pesos a week into a prepaid airtime wallet so they can buy more digital airtime. And so, that's where I think the real opportunity is going to come, when you can create interoperability between those different types of accounts, which would include, internationally enabled payment cards, right? Credit cards and debit card, also domestic solutions, and then the more simplified wallet providers. But it's been fascinating to watch how this has spread globally, and then importantly, how much we can learn in the way that we can get more creative and more nimble in offering solutions in countries that Adam and I are working in today. There's just so much we can learn, right, by looking outside of what's been going on in the U.S.
We do get skewed in terms of the view, here in the US. But if we look at China's about to launch, the E1 ECNY in a mobile wallet for the Beijing Olympics as a primary payments mechanism. That in itself is a pretty significant news item in respect to evolution of money. It's the biggest evolution of money we've seen since in the 1600s, the creation of the banknote. But you could argue, right? But the mobile wallet interoperability you talk about, and sort of this open finance view of, you're on Amazon, you don't really care what the underlying payment vector is, just as long as your wallet is smart enough to work it out, whether you've got whether you've got an underlying crypto account, or it's USD, or it's ECNY, ultimately your wallet's going to be smart enough to integrate, or just figure that out. And so isn't for both Plaid and Q2 the more natural place to build embedded finance in a mobile wallet?
So I'm happy to take this, and I'll hand it over to you, Adam. So I think, again, I would defer. I really want to always tie these conversations back to the person, right? What is a person trying to achieve? And then what are the various environmental factors, technical factors, cost factors that are going to enable a solution for that person in that moment? And in some cases, that might be a prepaid wallet. In other cases, with a particular type of funding source. In another case, it might be a wallet that facilitates all kinds of different payment methods. There could be, a variety of different debit and credit cards loaded in there. You could have digital assets stored in there. You could have a whole host of things. In another environment, as difficult as it is for me to say it, it might be cash, right? So what is the thing that the person is trying to achieve? Who is the provider of the service? And then how do we just make that as easy and seamless and accessible to the person as possible? So I try not to be overly prescriptive about, why a wallet is better or not. It really is about what the various factors are. In a number of conversations with customers of ours at Plaid, they're trying to balance a lot of different things. That they want ultimately the person to convert through the experience. They want the person to get to the destination and the outcome that they want. So how do they balance that conversion metric with things like cost for the provider themselves and customer experience, making it delightful? And it's those three elements are going to get mixed up a bunch, right? Which is, do you over-index on customer experience for, for a higher expense? Do you stay hyper-focused on just conversion? And these are things that we just trust our customers to be sorting out, right? And we will help them through that, try to make the conversion as high as possible. We've been investing on a lot of that over the course of the last number of quarters at Plaid, try to help them drive cost down so that they can really optimize the customer experience. But again, I think it's really about the nature of the service being provided and the person that is taking advantage of that service.
Okay. Yeah. Did you want to comment, Adam?
Yeah. I think that's a really interesting kind of rubric that you lay out, Ginger. And I think, our lens on it at Q2, and more specifically my lens, of course, is, we're carrying around all the payment mechanisms kind of that have ever been invented. We have money that's made out of paper. We have money that's made out of metal. It's really inconvenient. I hesitate every time I get change somewhere. I just want to throw it as hard as I can because inconvenient, it's low value. We've got paper checks, which are absurd to the point of ridiculousness, but businesses are sending out tons and tons of paper checks. We do a ton of positive pay business to help protect against fraud.
But this is a real US thing. Like, what is it? 78% of all checks in the world are written in the United States. It's such a legacy thing. It's like, what do we have to do to get rid of checks?
It's the inertia, right? But I've got contractors that I want to work on my house, and all they're going to do is take a check. I can't send them $17,000 on Venmo. They don't want to give me their bank details. If I ask them for wire instructions and I can get a wire done at my bank, they don't know how to give me the right ABA number for a wire. So in spite of all the new things we've created, all the ways there are to make a payment, that intersection in the Venn diagram between payments the person wants and payments that I'm comfortable giving, and then the limits, sometimes that Venn diagram gets really shallow.
But again, this is very US-centric thinking. Europe doesn't have checks. Asia rarely has checks. You've got some in the Middle East. Africa doesn't have checks. So,
sure.
For the European markets and most of the Asian countries that have rolled off checks, the real-time bank-to-bank payments capability obviously is being key. Now, we've got Fed later coming in 2024. Fed now, sorry.
I heard that, Brett.
It's a Freudian slip. But is it just education, Adam? Because the reality is it's faster. You're going to get money into your account instantly. It's arguably safer. Checks are not secure. What's the problem?
It's familiarity and it's behavioral inertia. Forget about checks.
But Europe had familiarity and behavioral inertia with checks, and they were able to get rid of them.
But that certainly is the case. The thing about it is, end users are comfortable with methods of payment. They don't care about making the payment. No one gets excited. Well, maybe some people do. It seems very unlikely somebody gets excited about making a payment by smashing their $1,000 cell phone against a POS terminal. People do it because they think it's going to be more convenient or it's more useful. For a lot of people, the plastic swipe is still a very common form. That's reasonably modern, right? Because it's in the wallet.
It's only 50 years old.
Yeah. You got your wallet in your left hand. You walk up. You got your card in your right hand. You swipe the card. You put the card back in the wallet.
I think there's memory of that. I think there's a pretty easy way to get rid of checks in the United States. Is helping people understand that sak, the originating word that now has become check, was actually a Persian word used for a bill of exchange on the Silk Road. So if everyone knew they were using a Persian payment artifact, I think it'd disappear pretty quickly in the US.
That might do it.
All right, let's talk about the partnership between you two guys. You've just announced, Plaid and Q2 coming together to create an open finance platform. What specifically does that mean for people listening to the show right now?
So for Q2 customers, I think it's pretty exciting because it means that Q2 is going to help financial institutions make their accounts available to the universe of participants in the Plaid ecosystem in a way that's more secure, more reliable, and more predictable than it was before Plaid Exchange. And then the second big piece that I'm really excited about is working with Plaid and the excellent work that they've done to create granular and specific control around observing where aggregation comes from, where the data is going, and then being able to dial that up and down as end users are comfortable. And those are two things that we just we just really don't have today. Accounts have been getting aggregated in the US since 2000, maybe earlier, with the Yodleys and Vertical One was an early player, I believe, in that space. They're long gone. But this is the first time we've really put the end user in control in a meaningful way from their digital banking experience over how that happens and doing some of that permissioning and authorization. And I think that's really, really going to be valuable for account holders.
Yeah. And I mean, just to provide a little context on why this is so meaningful for Plaid also is that, nearly a quarter of the accounts that are connected through Plaid are held at, credit unions or community banks and just smaller financial institutions. And as I mentioned before, like we just care deeply about ensuring universal access, that these accounts are just as connected and just as secure and just as reliable in the way that they operate within the fintech ecosystem as any account offered by any other type of institution. So, the partnership with Q2 just benefits tens of millions of people who bank at smaller institutions to be able to have this kind of access. And then part of what we've done with Plaid Exchange and just ensuring that Q2's integration with Plaid Exchange is that hopefully the lift for these customers of Q2's can be really lightweight. So that this enablement is really done in partnership with Q2, who's doing most of the heavy lifting here. And then it just becomes, something that's a part of the services that Q2 offers.
So you talked about tens of millions of customers. How many customers do you expect will benefit from this partnership, Adam?
I think we generally see aggregation rates, and it varies by FIs, probably as high as 30 or 40% across users, sometimes higher, sometimes lower. I would think, Ginger, you could tell us what the average you see on the Plaid side is, but I would expect over time to see that number even go up. I think that the fintech model and the fintech plays into that part of the space are compelling for account holders at financial institutions. And I would think that in the coming years, the number of end users that benefit from not just Plaid, but obviously the other aggregators and ecosystem players that we work with probably will get well north of 50% pretty quickly.
Yeah, and I think also, institutions who begin to enable this more deeply, this kind of enablement and permissioning for their consumers, really begin to see the benefits of greater use of those accounts. It's the way that the financial institutions stay primary, and you can use the financial institution issued account as the hub, and then it spokes out right to the other fintech applications, and that's really important. I know it's really important for a lot of the banks that we talk to directly, for sure.
So specifically this year, what's different? Because you guys have presumably been partnering before, but what do you see the outcomes in 2022 specifically being, Ginger?
Yeah, so we've done some really interesting work with the integration that we have with Q2 to help keep the permissions that the consumer is setting up visible and transparent across both institutions. So to put it a little bit in context, Plaid just launched Plaid Portal, which is a product. It's actually my.plaid.com. So it's a surface that we've provided that allows any person to come to that surface and see where their financial information has been permissioned. So they can see, it drives transparency, whether or not my bank XYZ account is connected to Venmo or Chime or Robinhood or Cash App. And then it allows the person to actually take an action and say, I want to stop sharing my data with that application if they so desire. And the two-way flow of information and the APIs that we've created with Q2 help us to keep that kind of transparency and control in sync with one another. So I think this is a really unique component of the way that the institutions are working together.
Obviously we're in a very data-rich society, and there's a lot of issues about privacy and so forth. But what data exactly do you think consumers are looking to have access to in respect to financial services and have more control over who accesses?
So if you don't mind, Adam, I just want to hop in here because I actually think it's data minimization is a big thing that we've been focused on recently, which is the consumer can choose what account they want to permission and what type of data they want to permission. And so that's different than historically what had been available when we were very much in the getting started in this open banking and open finance journey. And now we've just become so much more sophisticated. And so each use case may require a different type of data to be provided. And so a customer may say, I really want to provide my transaction history because that's how the budgeting app that I'm using is helping me to understand, my inflows and my outflows and can help me build a better budget. In other cases, somebody might say, I just really want to permission the balance check because that's what Venmo is going to use to make sure that I'm good for the payment I'm about to make. And so it helps the customer to get smarter about what information they're providing to what application, and then they can understand, what's being used to power the services that they're taking advantage of from the fintechs.
Okay, what about you, Adam?
I think just giving the end user the transparency around where is my data going, because it's really, it describes the end user's activities. It's the end user's data. It's about
who has access. Yeah. Who knows my account balance outside of me? Who knows my account number? You talked about the fact that your contractors don't want to give their bank account numbers because it's like they're worried people could steal their money. But, who has access to that information and why, right?
That's right. And being able to see that day after day after day. Right? Not just, okay, you're linked with these 3 accounts, or I got to remember I set up a Robinhood account, 3 years ago, and then I forgot about it. Well, if you forget about it, Robinhood's still watching your balance if they're pulling that data because you permission them to do it at some point for some long period of time. So that, I think transparency and observability for end users in their financial technology stack, for lack of a better word, actually encourages trust. And I think citing that at the financial institution where the end user has a relationship, they know where the building is that they can drive to and talk to a human being, and then they know they can have a relationship with someone that can actually be held accountable. It's different than, I love Netflix, but I don't think I'll ever call them on the phone. Right? The algorithm there is not something that can be accountable to me. There's no person in my relationship with Netflix, but your financial institution, you get a person and you can have a relationship with them when you need it. And I think that's a really powerful idea, even as digitization continues to rise.
Yeah. Where, in terms of what we're seeing in the markets in respect to, the platformification stuff, obviously you got players like JP Morgan Chase who invested in hundreds of fintechs and partnerships. But how does this change, or how does this affect the smaller banks in the US, Adam?
We've been saying for years on the Q2 side, if I get my phone out, like Bank of America gets the same number of pixels. JP Morgan Chase gets the same number of pixels on the screen that A+ Federal Credit Union here in Austin, Texas gets. And so there's a real opportunity with good technology to eliminate some of the disparity in those experiences, both from the perspective of supporting community banking, which we believe deeply in and is a key part of our mission to strengthen diverse communities by strengthening their financial institutions, but also because it's important to Q2, just like it is to Plaid, for the account holders and customers of those financial institutions to have access to the same technology and the same opportunities. So if Venmo is great, then you should be able to have a Venmo relationship and use Venmo against any account in the United States if that's what you want to do. And I think that realization that we can bring that to banks in the longer tail of the size distribution is a powerful one. And that democratization in terms of the access to technology it's a big part of our mission at Q2 and what we focus on. We've got very large FI customers and we have very small FI customers, but a lot of our culture is around, let's give them all the same approach to technology. Let's give them all the same value proposition.
Ginger, at the start of our discussion, you talked about the fact that we'd seen an acceleration in adoption of digital banking tools as a result of the pandemic. I think there's a fair argument that the smaller banks and the regional players tended to be laggards in respect to a lot of the technology. Have you seen a significant uptick in the smaller banks looking to partner with Plaid in recent times?
We have, and it's one of the reasons why we're spending more resources now on self-serve and scalable solutions to getting folks enabled. The partnership with Q2 is certainly an example of this, and even more of the platform solutions that we can build to help folks get started themselves. And I don't think that should be surprising, right? I mean, these folks are part of the society that we're living in, where we recently did a study where 7 in 10 U.S. customers say that fintech is now made, because of the fintech solutions and this rapid expansion over the course of the last 12 to 24 months, like finance is actually part of their daily conversation. They talk about these fintech tools. And so making sure that the places that they work are enabling people to take advantage of these is something that people are experiencing every day. So we're excited about the increased curiosity about how all this works. I'm eager to get this universal access mission of ours really landed. And it's the partnership with Q2 is a great step towards this. I think we're very mission aligned and vision aligned on what we're trying to achieve here. And so I'm super excited about it.
Awesome. So, Adam, where can people go to find out more information about Q2 and this partnership with Plaid specifically?
Yeah, so if you're a Q2 customer, you can reach out to your relationship management team for more details. We've been communicating with existing customers a bit, and if you're not a Q2 customer and you're interested, certainly,
and you should be. Yes,
the website's got great information there, and you can certainly reach us there. And then we've got teams at all the major events and conferences and everything else. So we're absolutely around, but the website would be a great place to start.
And Ginger, for Plaid, for the fintech.
Yeah, same. I mean, plaid.com has a lot of great information. If people are interested in Plaid Portal, which we just launched, which is the tool for transparency and control, it's at my.plaid.com. And then, always happy to connect with folks directly. I'm on LinkedIn and very active. So if people are interested in understanding our solutions better, feel free to reach out.
Awesome. Well, Ginger Baker and Adam Blue, thank you for joining us on Breaking Banks today and talking open finance, mobile wallets, and the pandemic effects on digital finance.
Thanks, Brett. It was fun. Thank you, Adam.
Thanks, Brett. You bet. Thank you, Ginger.
All right, guys, that's it for this week's show. We will be back with more Breaking Banks next week. Thanks for joining us. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.